So the Dallas housing market continues its trend of an ever-increasing supply, but despite new listings spiking higher than we have seen in years, prices continue to rise even in the face of high interest rates. Today I'm going to be answering these questions. Are we seeing the tail end of a housing price increase? What's in store for us this summer based on the current trends? What does it mean that inventory keeps going up? And are we entering a period of stagflation? I discussed stagflation all the way back in my September market update in 2023, and today many people, including Jamie Dimon, think that stagflation may be a real possibility here in America in 2024. We're also going to be talking about what the Fed signaled in their meeting on May 1st, which was just yesterday, and what that means for the housing market. And like I do every month, I'm breaking down the data here in Dallas-Fort Worth this month and giving you some county-specific data on the 4 largest counties here in Dallas-Fort Worth. Now let's go ahead and start with an overview of the whole market. The median price in the Dallas-Fort Worth housing market was $380,000 in April of 2024, which is up $6,000 from this time last year, with the average price being $471,000, up $12,000 from this time last year. When we look at days on market, it's down from last month all the way to 24 days from 28 days, but this is also up 2 days from this time last year. Now, the thing that we really want to be looking at this month is the continued trend of rising listings. We have 15,683 new listings on the market in the month of April. This is 2,000 more than it was last April and pushes our inventory up to 35,146 homes, which is 10,000 homes more than last year. Now, overall, I don't know that rising inventory is something that we should be very concerned about yet, because we are coming out of a record low inventory from the pandemic and people are settling into the new normal of high rates, which are currently averaging at 7.75% for a 30-year fixed rate mortgage and 6.95% for a 15-year fixed rate mortgage. Now, the thing that I am a little bit concerned about, and I think that could be a driving force for the housing market correction, or at least very flat growth going forward, is that sales are currently down to 8,762 for the month of April, and this is 1,000 units less than last year. April was historically a bit of a slow month, as people are usually holding off for summer to begin, and closings should pull up in May and June, with families looking to make their moves outside of the school year. So if we see sales slump again in May, then we should really start being concerned that buyer demand is not going to be keeping up with inventory for the long haul, which means days on market will begin to go up, homes will go unsold, and we may see more price reductions. Next up, I'm going to be talking about what the Fed just said on May 1st regarding interest rates in the future. But before I do that, I'd like to introduce myself for those of you who are new to the channel. And if you don't know me yet, my name's Corin, and I'm a local realtor here in the Dallas-Fort Worth Metroplex. I've helped people move here to the Dallas area, as well as locals who are looking to downsize, upsize, or cash out. So if you have any real estate needs here in the Dallas-Fort Worth Metroplex, or you want me to refer you to a great realtor in your area, don't hesitate to reach out. You can find all of my contact information in the description below, and if you'd like, you can set up a Zoom video conference or a phone call with me via my Calendly link, where you can give me some details about how I can help you, and we can block out some time for us to get to know each other, and I can help you with whatever real estate needs that you might have. And if you are looking for a personal comparative market analysis for your home here in the Dallas-Fort Worth market, and you want to know what you might be able to get for it if you were to sell today, you can request a free no-obligation market analysis on your home from me as well. Now, getting back to the Federal Reserve, the meeting was held yesterday, and the main takeaways are that we aren't going to be seeing any rate cuts soon because inflation is still too high. The job market is also strong with 3.8% unemployment, and the jobs report from March shows 303,000 jobs were added, which is above expectations. Now, they are leaving the door open for rate cuts sometime before the end of the year, but I wouldn't hold my breath on that one. I did mention on last month's market update that there was some talk of them either going down to only 1 or 2 rate cuts, maybe around September, and it's looking more and more likely that we're only going to be seeing 1 rate cut sometime after September, with 2 a slight possibility. This news will likely have a dampening effect on the market going into summer, as homebuyers won't find it encouraging to purchase a home if they feel like interest rate cuts are not on the horizon shortly. Now, in other news, Jamie Dimon, the CEO of JP Morgan Chase, which is the largest bank in America, publicly stated that he believes the economy looks more like the 70s than it has in the past, with a real risk of stagflation in the coming years. He is still hopeful that we will have a soft landing, but sees signs that we could be entering a period where we have rising inflation coupled with a stagnating economy. Now, Jamie Dimon runs the largest bank in the US, and he knows a thing or two, so it is something that we should be watching out for. Jerome Powell even spoke to this during the meeting on May 1st, and he claims that he doesn't see stagflation in the future, but I always like to remind people that the Federal Reserve also called inflation transitory for nearly a year when we had rising inflation before they finally admitted that it wasn't going to be going anywhere. Now, the data we're looking at next shows the year-over-year changes looking back 12 months from April 2024 and April 2023 here in the Dallas housing market. In the last year, sales are down 6.1% to 109,000 homes sold, with the volume down about $2.5 billion or 4.54%. Meanwhile, new listings are up 1.6% from this time last year, but inventory is up quite a lot as well at 14.8% year over year. Now remember, this data looks back over the last 12 months, and we are in a potentially rapidly changing market right now. But even in this data, we can see that the inventory is coming online faster than it's moving versus April 2022 to April 2023. Now, our month's supply is also up 26% year over year to 3.4 months of supply, and our month's supply for just April 2024 is at 3.9 months, so we are trending up rather quickly as a result of lowering sales. Our sales to new listings ratio is now at 66.85%, which is down 5.48%, another signal that the movement of inventory is slowing in the market. With that being said, the median price home still is selling for 0.8% over the last year versus prices from April 2022 to April 2023, and the average is up 1.7%. So we are still seeing some modest price growth despite inventory normalizing back to pre-pandemic levels. Finally, as I reported in the single-family detached report last month, we are seeing a 9% drop-off in sales of homes that are 1 to 3 bedrooms, but only a 3% drop-off in sales for 4-bedroom and larger homes. Now, what this likely means is that starter homes and first-time homebuyers are likely not entering the market more so than people who are seeking larger and more luxury homes, which tends to be 4-bedroom or larger. So what does all this data mean? Well, right now, it's still too early to say for sure. It is still definitely a possibility that we are simply correcting toward a market more like what we saw prior to the pandemic, as inventory is yet to reach pre-pandemic numbers, although it is rising closer to those levels every month. It will be very interesting to see how the May data shakes out, because if we see another month of declining home sales and increasing inventory, that could end up driving home prices down slightly, as buyers simply cannot afford to keep up with these housing prices. Now, personally in the data, I don't see any dramatic shift in the market coming, but it is entirely possible that we could see a slight drop in prices if the trend continues this way for much longer. And the Federal Reserve being sticky with interest rates also does not bode well for the housing market, as the one point of relief buyers might find in rate reductions seems like it will continually be put off further into the future. Now, I don't see us having very substantial pricing drops over the next year in housing, but I would not be surprised if we saw some softening in the housing market, anywhere from a few percentage points drops, or possibly just seeing prices go up 1 or 2%, being outpaced by inflation. Now, before we wrap up, I want to give you the data on the 4 largest counties here in the Dallas-Fort Worth Metroplex. Now, you can see by this data here in Collin County, we had a 4% drop in the median price home from last year, and sales to new listings ratio is down 55% from a pretty substantial 77% this time last year. Now, month supply has also nearly doubled and is now at 3.1 months supply, with inventory at 3,784, which is up almost 1,500 from last year. When you look at Denton County, prices are flat year over year, with new listings up as well, about 280 listings. Again, sales to new listings ratio is down substantially from last year and inventory is up. In Dallas County, we actually see a nearly 3% rise in the median price home from this time last year, and Dallas County has been a real winner in this high interest rate environment. This is probably a result of the houses being more affordable, and it's also conveniently located within the Metroplex, with the median price being just $375,000. Still, sales to new listings ratio is down 57% from 74% last year in Dallas County, and inventory is up nearly 2,000 units. Finally, we have Tarrant County, and here prices are down 2.3% year over year, with sales to new listings ratio down to 60.58%. Again, this is certainly the tipping point in the market, and what we are seeing is directly linked to the rising interest rates that have been with us over a year now. Now, the question we should be asking at this point is, where is this going to balance out at? We could be seeing the beginning of a larger correction with more and more inventory coming online as sellers try to cash out all at once, or this could simply be the stabilizing point with us equalizing slightly above these inventory numbers and prices remaining flat the rest of the year. Now, I did speak to this a lot more in last month's market update, but there is still a huge housing shortage in America today that won't be corrected anytime soon. So even if we do see some softness in the housing market in the short term, in the long term, the housing market is poised to continue to go up and remain a competitive asset class for those who own. Now, I want to thank you guys for watching this video all the way through. If you found this information helpful, don't forget to hit that like button, subscribe to my channel for more content just like this, and leave a comment below with your thoughts on the current housing market, or any questions that you might have. If you would like me to help you with your real estate needs here in Dallas-Fort Worth, don't forget you can reach out to me day or night. I'd love to represent you and protect your interests in this volatile housing market. All of my contact information can be found in the description below, and if you want to watch another one of my videos, just click or tap the screen above, and I want to thank you again for watching.